So there's loads of exciting things happening in the markets at the moment and some important changes for UK investors. Hi, I'm George, Founders Investing Expert, here with all the latest market news, as well as some platform updates from some of the UK's top trading apps. And if you're interested in some more content like this, do me a favour and make sure to like below and subscribe to our channel. So big news for the UK market at the moment as the FTSE 100 hit an all-time high, beating a previous record that was set in February 2023. And it did it on St. George's Day. How very British. And since that day, it has gone higher again, breaking some more ceilings, because what tends to happen when a market reaches a new high, it then tends to be followed by more new all-time highs. So that's what we're seeing. And by the time this come out, FTSE 100 might have already breached the high once more. For the FTSE 100 itself, just in case you weren't aware, that just tracks the 100 biggest publicly listed companies in the UK. So the fact that the FTSE 100 is growing and breaching an all-time high is pretty good news for the UK stock market, because it's kind of like an overall temperature check, which just shows how healthy the biggest companies in the UK are doing. So this is great for UK investors. However, the only problem with the FTSE 100 is that a lot of analysts for a long time have been thinking that the index is undervalued compared to international competition like the US, say. So this growth that's kind of happened with the FTSE 100 it's good news, but it sort of should have already happened anyway. So it's basically like bringing the FTSE 100 to where it should have been anyway. So yeah, if you want to get in on this UK action, most of the best trading apps and platforms in the UK should let you invest in a fund or an exchange traded fund, an ETF, that copies the FTSE 100 index. So all of the companies that are in the FTSE 100 index, you can invest in a fund that invests in all of those. And the great thing about that is that it's automatic, it's simple, so just one investment. It's usually low ongoing fees, so it can be cheap. And it's a really good way to just get broad exposure to the biggest stocks in the UK. The FTSE 100 is also great in terms of income and providing dividends. That's what it's kind of like most famous for. Because a lot of the companies in the FTSE 100 are a little bit older, a little bit more old school. They tend to be kind of big cash generating companies instead of growth companies. The good thing about that is because they're taking in lots of cash, they can actually pay a lot of cash out to investors, which you don't tend to get with growth companies and like the top companies in something like the S&P 500. The other big kind of thing that's happening at the moment in the markets is we're in the midst of earnings season. So earnings season is when companies will release quarterly reports that look at basically how they're doing financially, but the headline things that everyone is interested in and that people will look at and is reported on is the revenue and then also the profit. Now, the profit for companies has lots of different names. Earnings actually means profit. So when people talk about earnings, they're actually talking about profit. Just because in finance, people like to give everything about 5 different names just to try and confuse you. But earnings equals profit. So just think about that. These earnings reports will give a bit of a financial snapshot for companies for how they have been performing, but it's also a chance for companies to talk about the future, perhaps the rest of the year or even a couple of years ahead to see what's in the pipeline. Now, these kind of forecasts and looking forward are just projections. Sometimes they can be positive and sometimes they can be negative, depending on the kind of the macroeconomic conditions and how they've been performing as a business. All of this, good news and bad news, can impact the share price. So in these kind of earnings season periods, it does tend to be quite volatile for stocks that are reporting. So you might see in your portfolio, if you hold stocks, that there's a bit more price movement at the moment than normally in quieter periods. And this is just because there's a lot of news around the positive or negative performance based on the past quarter, and that can impact the share price. But often when this happens, it can just be a bit of a short-term effect. So you might see like kind of a quick bump up in a share price or a drop down, but then over the next kind of few weeks, months, things kind of normalize and it goes back to normal. Leading on from earnings, we've also seen a lot of movement and volatility in artificial intelligence, AI related stocks. So things like Nvidia, ASML, ARM, Meta, which had a bit of a stock correction or a stock drop last month. Some of them have since recovered. Others have now kind of done a bit worse, like Meta. And this was kind of part of a wider correction in the space, because you've probably noticed AI stocks have just been booming and going up and up and up. And it's kind of healthy for stocks to actually have a bit of a breather and correct. So it's not unusual after a big kind of pump like this for a drop of 10, even 20% sometimes, because some of the growth in these stocks has just been gigantic. So it's kind of a healthy thing, to be honest, because otherwise if you keep going up and inflated, that's when you kind of get into bubble territory, which is just not a good thing for investors. And so finally, another kind of general update is around the cryptocurrency space, if you are cryptocurrency inclined. So the latest Bitcoin halving just took place in April, and this is an event that happens roughly every 4 years, not down to the day, but without going into like kind of all of the complex details around the Bitcoin halving, essentially it means the rate of new Bitcoins that are entering the ecosystem is going to be halved. So it puts a bit of a constriction on the Bitcoin supply going forward. Historically, this doesn't actually move the needle too much in terms of immediate price action. So you've probably seen Bitcoin has actually been a bit flat since the halving, because a lot of this kind of supply constriction news is already priced into Bitcoin, but it does tend to be the catalyst for the crypto bull markets that happen every 4 years. But they kind of get drawn out over about 12 months. So, and then crash usually afterwards. So what we're probably going to see now is potentially another crypto bull market. But I mean, the crypto market is changing all the time. It's actually becoming a bit more mature, believe it or not. So we might not actually see the same kind of explosive price growth that we have after previous halvings, simply because the market's just getting bigger, and when the market is bigger, it's a lot harder to see that kind of growth. Some investor updates for the new tax year, because we've got some ISA changes and changes to the allowances for the 24-2025 tax year. And there's a few things that you probably should know if you are an investor. So firstly, the tax allowances have changed. We knew that this was going to be happening, but now it's actually happened. So your capital gains tax-free allowance has dropped from £6,000 to £3,000. So this basically means that in a single tax year, if you make more than £3,000 in terms of capital gains, you will have to pay tax on anything over that amount. The other tax-free allowance that's changed is your dividend tax-free allowance. So this has also dropped, but from £1,000 to £500, which means that you would kind of have to pay, or potentially have to pay, taxes over any kind of income or dividends over £500 within a tax year. Now, £500 dividends might sound like loads of money, but in the grand scheme of things, it's not huge. So say, for example, you have £10,000 invested in a stock or a fund that has a 5% dividend yield. And bear in mind, £10,000 is only half of your yearly ISA allowance. So if you have £10,000 invested, you're getting a 5% dividend yield, you will hit that £500 threshold. So anything over that then could be taxable. Now, the best way to kind of avoid these taxes entirely is using a stocks and shares ISA. So the stocks and shares ISA is just a wrapper that can protect your investments from these taxes. Any investments held in this account, you don't have to worry about these taxes at all. So the allowances changing won't really affect you, but it does mean that these stocks and shares ISAs are more important than ever, basically. Your £20,000 yearly allowance is staying the same, so that's not changed at all. But one thing that is happening is that you do now have the ability to open more than one stocks and shares ISA account each year and pay into it. So essentially you can have one stocks and shares ISA for investing in individual shares, and then another one for funds maybe, because some platforms will be really cheap for shares, some platforms will be really cheap for funds, some platforms might have like a great app or interface or research, anything like that. This just means you're not tied down. So you got a lot more flexibility by being able to open and pay into more than one stocks and shares ISA account each year. To be honest, as soon as the tax year started, I went online and opened myself a few stocks and shares ISAs because I wanted to have more than one for quite a while now. It was just a bit of a pain thinking ahead too much about what I was going to be or how I was going to be investing for that year. So I found it like really helpful being able to do this now. And with those changes, there are going to be some changes made to how you can transfer money in stocks and shares ISAs and ISAs in general. So you're now going to be able to do partial transfers, but not all providers yet are kind of allowing that or facilitating that because they just don't have the infrastructure for it. The government kind of made these changes straight away without too much warning. And so the platforms are now trying to kind of work on ways where they can actually help you do that. So this is a bit of like a work in progress because some platforms won't let you open more than one type of ISA even. So for example, banks may have stocks and shares ISAs and cash ISAs and different types of cash ISAs, say for like fixed rate, variable rates, all that sort of stuff. But it does mean overall more flexibility happening. Good news for investors, good news for me as an investor as well. I'm happy about it. And yeah, I think it's going to open up the stocks and shares ISA market massively, which is great. Okay, so let's check out some platform updates. So the big news this month is that CMC Invest has launched its premium plan. So this plan is going to include a self-invested personal pension, or a SIP. And to sign up for premium, the normal fee is going to be £25 a month, which gets you everything that's in their plus plan, but also the SIP as well. The plus plan includes flexible stocks and shares ISA, some like more in-depth analysis tools, multi-currency accounts, quite a few kind of added perks and bonuses and features compared to the free plan. Now, it's £25 a month, obviously a bit of a commitment, especially if you haven't already tried CMC Invest on its free plan. But the good news is CMC Invest has launched this with a pretty amazing offer where you can get 12 months of premium for free. So this is essentially going to save you £300 in annual subscription fees. And it basically means that you can have an ISA and a SIP without paying any account fees. There's no like ongoing commitment either. So you could just move once your 12 months is up if you want. To sweeten this kind of deal further with CMC, they are currently offering cashback of up to £1,000 if you transfer a portfolio over. So transferring like an ISA or a SIP. There are some T's and C's that go with this, and you do need quite a high balance to be transferring over to qualify for the maximum cashback. So yeah, you can check that out in more detail to see if you would qualify for that. But it is nice if you are thinking of moving to them for that free 12-month kind of premium deal. All right, so a couple of other updates that we've got for you, mostly revolve around stock expansions and cash interest. So eToro has added over 500 new assets to the platform. Wealthyhood has added an extra 100 stocks, and XTB has upped its cash interest rate to 5.2%. In the past, you did need to have a portfolio of at least 30K with XTB to get their kind of top rate of interest, but they've removed this. Now you can earn 5.2% interest on any balance of cash that's held in XTB. So yeah, ideal. They'll also offer you interest on euros or dollars at slightly lower rates. But again, there's no minimum balance for that now either. All right, so thanks for watching. Make sure you tune in next month. And if you do want to check out any of the platforms I've mentioned here, just click on the I over in the right-hand corner or click here for our latest videos.